If you're serious about investing in commercial real estate, whether you're already getting started or you're serious about doing deals, there are 5 questions every investor should be asking their attorney. And most people never do. I'm Shams Merchant, commercial real estate attorney and a private equity attorney based in Dallas, Texas. I've closed deals ranging from only $1 million all the way up to $500 million. And today I'm going to answer the 5 questions that can save you from making costly mistakes when investing in real estate. Let's get into it. A syndication is typically what we refer to as a single asset fund. That's what the word syndication typically means. And the main difference between a syndication and a fund is just that. It's that a syndication is for a particular identified deal, typically a single asset, whereas a fund is usually to acquire multiple properties over time. So there's a couple of situations where you would create a syndication, and primarily it's to acquire any type of real estate. That could be commercial real estate or residential real estate, but you can syndicate any type of project that you want. Clients also syndicate oil and gas deals. They syndicate acquiring actual operating businesses. Syndication is just a general term we use to identify what type of investment fund we're creating. It can be used for real estate or for any other type of business or acquisition that someone wants to do when they're raising capital from passive investors. Waterfall structure is the mechanism that breaks down how profits and losses are distributed to investors and to the sponsor or the fund manager in a private offering. It's very important because the waterfall model is how investors get paid, and it's how the fund manager gets paid their promote, or what we call carried interest, which is the sweat equity that fund manager is receiving as compensation for running the fund or for doing the syndication. And so it's very important that the waterfall model is structured particularly to that type of project or that specific asset class that the fund is investing in, so that investors see something that they're familiar with, that they are expecting to see and want to invest in, and also so that the fund manager can get compensated accordingly. There's a couple ways to know that the opportunity that you're investing in is a good opportunity. The first is that your financial metrics make sense when you look at them, when you create them. What I mean by that is you want to create a institutional quality pro forma or a financial model that breaks down what the profit and losses potentially could be for that deal. You also want to create a model that runs the project level profit and losses through a waterfall model that you've worked with an attorney to structure. That waterfall model then shows what happens not just at the project level, but once the investors' profits and returns have been taken into account. So you want to make sure that the project level returns and the investor level returns are both attractive. That's the first thing that you would want to make sure when you're looking at a potential deal. Most attorneys that are in this space, and when I mean in this space in this industry, is I'm referring to securities attorneys, private equity attorneys, and commercial real estate attorneys that structure investment vehicles for clients. They typically focus on the legal aspects of doing that. That's something that we do as well, obviously. We do excellent legal work for clients. But more so than that, what we've recognized is that clients need more than just great legal services when they want to raise capital and do real estate projects. So in addition to delivering excellent legal services to clients, we also assist our clients with creating institutional quality pitch decks and marketing materials. We also help our clients structure capital raising systems and help our clients go to market to raise capital via various different types of methods, such as raising capital from registered investment advisors, from broker dealers, and also building out their own investor base. Finally, we provide our clients with industry leading software to help them manage their syndications and their investment funds. We set up that software for them, so as soon as the legal documents are all done, our clients are able to start taking money in very quickly and get their offering launched in a record time. In other words, we offer services that other law firms and other attorneys in this space don't offer. The way I like to phrase it to clients is we're providing the full ecosystem for you to successfully raise capital and do deals. So it's not just the legal, it's everything else that you will need in order to successfully raise capital and to go do more projects. The number one piece of advice that I could give anyone investing in commercial real estate is to not cut corners when they are setting up their legal infrastructure, their capital raising infrastructure, infrastructure, their marketing infrastructure. These are all things that are extremely important when you're building a real estate platform to invest. And a lot of people in this space, they will cut corners in one or multiple of these avenues, and that's going to make it very difficult to run a successful real estate investment business. Everything has to be done in a compliant manner and has to be set up to where you can raise institutional capital in a successful way. And so I would say that the focus should be on doing setting all of that up the right way from the beginning so that you can be successful in your business. If any of these questions hit close to home, or if you want more information, please reach out. A simple 30-minute conversation can change the entire trajectory of your real estate investment business. My link is in the description below, and if you found this video valuable, please subscribe. Thanks so much for watching. I'll see you guys in the next video.